In this video, we're going to talk about some questions that mortgage loan originators can ask to realtors to either save deals that they've had in process or even to steal deals that another loan officer thought that they had. Now, I know it's pretty tough out there. It's a dog-eat-dog world. It's always been that way. Now it's especially so. So you know there's other loan officers out there looking to take your borrowers from you right up to the point until your borrower commits to you and pays for the appraisal. And unfortunately, even after the appraisal's been paid for, there can still be competition right up to near the closing to try to capture a transaction that you thought you had working. Now, first, I want to mention that these questions can be used with a realtor who is new to you, someone who you're going out on a coffee meeting or a Zoom meeting with, to let them know the kinds of questions that you're going to be asking about the properties that they bring to you, to show them that you're going to be analyzing everything in a thorough manner. These same questions can be used in that regard after an initial meeting. Maybe you call the realtor or the realtor calls you. They talk about a particular property that they're taking a borrower to. Maybe it was someone you referred them. Maybe it's someone that they're thinking about referring to you. But at any rate, there is a discussion that they're going to look at a particular property over the weekend. And so these questions can be used to show them that you're going to be very diligent about the transaction, including these questions about the property. And on the other hand, these questions can be used when you're having a shot, say, with a listing agent who is sending you a borrower or trying to send you a borrower who has been pre-approved elsewhere. And I know that is one of the ugliest parts of the mortgage loan origination business. Loan officers have been working with a borrower for many months, even up to a year or longer than a year. And then they end up maybe flitting away from the realtor that you referred them to or the realtor that you've been working with. They make an offer, the listing agent gets in their ear, the listing agent wants to send them off to another loan officer. And these are the kind of questions that loan officer has been asking the realtor on every transaction that gives the realtor the confidence that they will properly take care of the borrower. Now, you may also have a shot to call and introduce yourself to the listing agent. So with some of those agents, if you come across as knowledgeable and professional, they may hold off. They may have some reluctance. As hard to believe as it is, they may have some basic humanity and understand what it's like if you've been working with a borrower for a long period of time. But that humanity is not going to extend to the point where if you don't give them a real confident feeling that you're going to handle the transaction in a positive manner, they're not going to hesitate to steer that borrower off to a loan officer who they've worked with and they know does a thorough job. So the first one of those questions, it relates to zoning. Now, most single-family houses in residential neighborhoods are going to be properly zoned. But once in a very great while, you will have a residential property that is near a commercial street that somehow has been zoned commercial all along. Doesn't happen very often, but it's a good question to ask the realtor to show them you're being thorough. Another time zoning comes into play more frequently is if you've got a multi-unit property. A tax assessor may go out and see 3 units, and it can be tax assessed therefore for 3 units, but it may have only been zoned for 2 units. So every time there's a multifamily property, it's an imperative question to ask that real estate agent, is this zoning, have you checked the zoning, does it match the number of units that you say the property has? Now, a second question relates to personal property. We know that mortgage lenders are not going to finance personal property. So it's better to ask up front to show that you're being thorough. Is the furniture being included? And if it is, then there's going to have to be a reduction in the purchase price for the value of the furniture. And it's something that you should be aware of up front, and you should make sure that the real estate agent's aware of it. It can't even hurt to ask if there's going to be anything in the sales agreement about items that would typically be considered incidental, like blinds and drapes and pool covers. So again, by asking this question, you're showing this realtor that you're a professional person, you're being thorough, and if they ever push back on you as to why you're asking the question, then you have a chance to educate them about why you're being so careful, so thorough, just the way you've been careful and thorough with your borrower's credit, with their income, with their assets. Now, the last question that I'm going to go over with you here relates to the recent sales history of the property. Most of you here will know that FHA will prohibit the transfer in less than 90 days, and above 90 days, there's a period of time when you need a second appraisal. But what I find a lot of folks are not aware of is that FHA, USDA, and VA will look at any house constructed in the prior year as being new construction. And so we recently were told about an incident where the house had been bought by an investor directly from the builder. The lender was taking the borrower on an FHA loan. It had been 8 months since the investor bought the property. So the loan officer thought they were in the clear. Well, it turned out that because it was less than a year and FHA considered that the property was new construction, when there's new construction for FHA, there are certain forms filled out at the time of sale. And because the borrower was getting the property from the investor and the investor had paid cash for the property, there were none of these FHA forms filled out, and it was too late to fill them out, and the transaction died. The borrower did not qualify for a conventional mortgage. If they had, there wouldn't have been a problem, but they didn't. And so it's always good to ask the realtor, what is the recent transaction history on the property? Even if you're outside the FHA guidelines, if you're looking at something where there's been a lot of resales in the past 6 to 12 months, especially if it's possibly a non-arm's length transaction, the parent bought the house 3 months ago, now they're selling it to the child. These are the kinds of questions that can cause a problem in underwriting. So again, by asking this question, you're being thorough and professional, and everybody sees that. So I'm Alan Berkovitz. I've been training new loan officers, loan officer assistants, and processors on underwriting guidelines and how to structure mortgage transactions that will close in underwriting. I've been doing that for over 30 years. I still do that through the Complete 1003 software at thecomplete1003.com, thecomplete1003.com. If you'd like to talk to me further about possibly helping to ramp up your new loan officers to close loans that they might have otherwise missed, and to prevent them from ending up in a situation where they submit a loan into underwriting that later will die in underwriting. Those 3 questions that I gave you were just a small portion of the section that we have on the property and appraisal questions list. You can have that entire list that you can use with the borrower, you can use with real estate agents. Not only will you do a thorough job and endear people to work with you, but you can also hopefully prevent having a borrower who you've had pre-approved for many months flit off to somebody else. We'll be back soon with another video.